All right, so we're diving into the world of IPOs today, specifically Hyundai Motor India. We've got a stack of documents here. There are DRHP, some CRISIL reports, and, well, let's just say it's a lot to unpack.
It really is, and it's a pretty exciting time for it, too. The Indian car market is, well, it's booming, especially with, the rise of SUVs, and then there's the whole EV thing happening.
It's huge, right?
Huge. And Hyundai's right there in the middle of it all, so this IPO, it's like a window into the future of the industry, in a way.
That's a great way to put it. This CRISIL report actually says SUVs are like the hot ticket item. 63% of sales just in the first quarter of fiscal 2025.
Wow.
Yeah, it's a lot. And then you've got the electric vehicle market, which is still finding its footing, but it's getting there. And the competition is heating up. You've got Tata Motors, Mahindra, and Mahindra.
Oh, yeah. They all want a piece of that pie. It's going to be interesting to see how it all plays out.
For sure. So in that kind of competitive landscape, where does that leave Hyundai, in your view?
Well, it's a crowded field, that's for sure. But Hyundai Motor India, they have this ace up their sleeve, their tight relationship with the Hyundai Motor Group. It's like a direct pipeline to global trends, the newest tech, all that good stuff.
So it's like they're plugged into a global network.
Exactly. They've got resources, research and development, you name it. And that's a big deal in a market that moves as fast as India's.
It's interesting you say that because they seem to be really committed to local production as well. Their plant in Chennai, that's one of the biggest in India for passenger vehicles, right?
It is, yeah.
And they're sourcing something like 93% of their parts locally. So they're really putting down roots, wouldn't you say?
Absolutely. I think that local focus is essential. It's not just about managing costs. It's about really understanding the Indian market. Like they've built up this impressive network of dealers, 364 as of June 30th, 2024.
That's a lot of dealerships.
It is. And they've got these smart programs in place, like the Hyundai Promise, where dealers will actually refurbish and resell Hyundai vehicles with warranty.
Oh, that's interesting. So they're sort of creating their own used car market.
In a way, yeah. It's a great way to build trust with customers and boost sales. And then on top of that, they're really focused on the customer experience.
Yeah, I was going to say, their digital platforms, the Click to Buy, the My Hyundai app, it's all in the DRHP, by the way, which for anyone who doesn't know, that's the draft red herring prospectus, basically their IPO Bible. But anyway, it seems like they're trying to make the whole experience of owning a Hyundai as seamless as possible.
Right, from browsing to buying to actually owning the car, it's about building that loyalty, that connection, especially in a market that's only getting more competitive.
And speaking of competition, their financials, it looks like domestic sales are their bread and butter, and SUVs, well, no surprise there, they make up a big chunk of that revenue.
Right. The SUV craze is real. But the interesting thing is, when you dig into their financials, I'm talking balance sheet, profit and loss, cash flow, they're telling a story. They show healthy growth, which is always a good sign, but they also show how reliant they are on the Hyundai Motor Group. It's something to keep in mind as we go forward.
Like those things are connected or something.
Exactly. And their key financial ratios, which are all laid out in the DRHP, they paint a pretty positive picture of their overall financial health. Although there was one thing that caught my eye.
What's that?
Their depreciation and amortization expenses.
Oh, you mean the fact that they've been shrinking as a percentage of revenue? I was wondering about that too. Is that a good thing or?
Well, it could be a very good thing. It might mean they're becoming more efficient, getting more bang for their buck, so to speak. But of course, it's always smart to, look a little closer, make sure there aren't any surprises hiding in the numbers.
Makes sense. Yeah, that's like anything else. You gotta look under the hood a little bit, right?
Right, exactly.
So this IPO, it's what they call an offer for sale, which basically means the money's going straight to the selling shareholder. And in this case, that's Hyundai Motor Company, not Hyundai Motor India directly. So how should someone be thinking about that when they're looking at this as an investment opportunity?
Well, it means we really need to understand Hyundai Motor Company's goals here, right? What are they trying to achieve in the Indian market? What's the bigger picture?
Yeah.
And how does Hyundai Motor India fit into that?
So it's like we're trying to get into their heads a little bit,
Yeah.
see their long-term vision.
Yeah, exactly.
And I'm thinking their promoter and management background, that might give us some clues.
Yeah, absolutely. And the DRHP actually does a good job of laying that all out, who the key players are, their experience, all of that. And it also shows us the current shareholder structure, so we can see who has a stake in the game, so to speak.
Right, like who are the power players and how much power do they actually have? And speaking of power players, there's that whole web of related party transactions.
Yeah.
I I mean, you've got Hyundai Motor Company again, Mobis India Limited, Glovis. It's a lot to keep track of.
It is, and transparency is key with this kind of stuff. These relationships, they're not necessarily a bad thing, but they do raise some questions like, are these deals happening at fair market value? Are they potentially hurting Hyundai Motor India's bottom line in the long run?
It's like follow the money, right?
Exactly.
Where is it coming from? Where is it going? And who's benefiting? The DRHP does give us a lot of detail, but it's up to each investor to really dig in and make sure they're comfortable with it.
Absolutely. And while their financials seem pretty good overall and their connection to Hyundai Motor Group is definitely a plus, we can't forget about risk. The Indian car market is incredibly competitive, both with local companies and global giants.
It's a jungle out there.
It is. And then you've got their reliance on Hyundai Motor Group for technology, resources, all of that. Any problems there could easily spill over and impact Hyundai Motor India.
Oh, for sure. And then there's regulations, which can change like the wind, economic ups and downs, even global events like what's happening in the Red Sea right now. All of that can have an impact.
Absolutely, yeah. It's a complex landscape.
It is. And speaking of complex landscapes, what about the whole EV thing? It seems like a huge opportunity, but also a potential disaster if Hyundai Motor India doesn't play their cards right.
It's a tough one, for sure. They've dipped their toes in with the premium ION IQ5, but to really make it big, they'll need to figure out how to bring the right EVs to market at the right price with the right infrastructure to support them.
Yeah, their Chennai plant, it's impressive, don't get me wrong, but can it handle the demands of EV production? The DRHP mentions plans to launch 4 new EV models, including the Creta EV in late fiscal 2025. That feels like a make-or-break moment, doesn't it?
It'll be interesting to see how it plays out. They seem to be taking a start high, go low approach, Start with the higher-end EVs, and then as the market matures, they transition to more affordable models. Which makes sense. It gives them time to build the brand, use their global tech, and hopefully by then, the charging infrastructure and consumer demand in India will have caught up.
It's a delicate dance, for sure.
Yeah.
A lot riding on their ability to read the market, make the right moves. So let's circle back to the financial statements for a minute. I know we touched on them earlier, but they're really the heart of understanding a company's performance, wouldn't you say? So their profit and loss statement, for example. What's that telling us?
Well, it shows a pretty healthy revenue stream, driven mostly by those domestic sales we were talking about. They've been able to maintain a decent profit margin, which is always a good thing. But it is worth noting that a good chunk of their expenses are related to those related party transactions we were discussing.
So that tangled web comes back into play again. It's all connected. What about their balance sheet? What kind of assets and liabilities are we looking at?
Their balance sheet shows a solid asset base, including those big manufacturing facilities. But they've also got some pretty substantial liabilities, things like borrowings and lease liabilities. It's a delicate balancing act, and investors will want to understand how those liabilities might impact their financial flexibility down the road.
Debt can be a powerful tool, but you got to know how to use it.
Exactly.
Now, the cash flow statement, that's the lifeblood of any business, right? What's the situation there?
Their cash flow from operations is strong, which is a great sign. It means they're making money from their core business. However, their investing activities have been eating up a good chunk of that cash, probably because of those expansion plans and investments in those new models we were discussing.
New ventures always take money up front. It's about finding that balance, right, between growth and sustainability.
Right.
And speaking of cash flow, I noticed they made a pretty hefty special dividend payment to Hyundai Motor Company. That must have made a dent.
It did, yeah, and it just highlights that financial relationship between Hyundai Motor India and the parent company. Definitely something for investors to consider. Now, about those key financial ratios you mentioned earlier, the DRHP has them all, and overall, they seem to be in decent shape.
Okay, but for those of us who aren't, financial experts, break it down for us. What do those ratios actually mean? Why should we care?
Sure. So their profitability ratios, like return on net worth and return on capital employed, those tell us how efficiently they're using their assets and investments to generate profits. And the good news is those look healthy. Then you have the liquidity ratios, like the current ratio and quick ratio, which show their ability to meet short-term financial obligations. And again, they seem to be in good shape there.
So far, so good. Anything else we should be paying attention to?
Their debt-to-equity ratio is worth keeping an eye on. It's reasonable now, but as they continue to invest heavily in these new models, expand their operations, that could change. And lastly, their inventory turnover ratio suggests they're doing a good job of managing their inventory.
So it sounds like they're checking a lot of the right boxes, at least from a financial standpoint.
Yeah.
But as always, we have to look at this in context, right? Think about their relationship with Hyundai Motor Group, the constantly changing car market in India.
Exactly. It's all connected.
Now, if someone is thinking about investing in this IPO, the DRHP actually lays out a very clear timeline with all the important dates.
It does, which is helpful.
Yeah, it's good to have a roadmap, especially with something this complex. But timelines and financials aside, there's another big piece of this puzzle valuation. How does Hyundai Motor India stack up against its competition in the Indian market?
Well, that's where that CRISIL report comes in handy. They did a whole peer group analysis benchmarking Hyundai Motor India against companies like Rudy Suzuki India Ltd. And Tata Motors Ltd.
It's tough though, right? Because it's not like they're all the same.
Exactly. Each company, it's like its own animal, different business models, different positions in the market, different growth rates. But those benchmarks, those ratios like price to earnings, price to book value, enterprise value to EBITDA, they give us something to compare it to, a way to get a sense of their potential value.
So we're not just looking at Hyundai in a vacuum. We're seeing how they measure up. And how do they measure up? I mean, are they priced competitively or are they asking for a premium?
Well, when you look at those ratios, they're generally pretty similar to their peers, which suggests their valuation is, in the right ballpark. But valuation is just one piece of the puzzle. You have to think about their future growth, their EV strategy, how the competition might change, all those things we've been talking about.
It's not just about the here and now. It's about the future.
Exactly. Past performance doesn't guarantee future results, as they say.
Right. So investors need to weigh all the factors. Speaking of which, what about the shareholding pattern? Who are the big players here, and how could their ownership affect the company's decisions down the line?
Well, as we've mentioned a few times, Hyundai Motor Company, they're the majority shareholder. They have the most say in things.
Right. It's their baby, basically.
Right. But the DRHP also lists other major shareholders, institutional investors, mutual funds. They all bring something to the table.
Okay.
But here's the thing. This IPO, it's going to dilute Hyundai Motor Company's stake. Their ownership percentage will go down, which could change the power dynamics within the company.
Interesting. So we might see a little power struggle down the road.
It's definitely something to keep an eye on. How it'll all shake out, well, we'll have to wait and see.
Yeah.
But while we're waiting, let's talk about those related party transactions one last time. They're a big part of how Hyundai Motor India operates, but there are those questions about transparency, potential conflicts of interest.
Yeah, that whole web of relationships. Hyundai Motor Company, Mobis India Ltd, Glovis. It's a lot.
It is, and with these close relationships, it's important to make sure everything is on the up and up. So Mobis India Ltd, they're a subsidiary of Hyundai Mobis Co., and they're Hyundai Motor India's main supplier for parts and components.
Okay.
And then you have Glovis, who handles all the logistics, the shipping. It makes sense, keep it all in the family, so to speak. But investors need to understand the terms of these deals, the pricing, make sure they're not hurting Hyundai Motor India's profits.
Right. It has to be beneficial for Hyundai Motor India in the long run.
Exactly. And the DRHP does break it all down, the revenue, expenses, balances, it's all there. But it's dense. Investors need to be ready to put in the work, really understand what's going on.
Do your due diligence.
Exactly. And then there's the framework agreement between Hyundai Motor India and Hyundai Motor Company. That's an important document.
What does that one do?
It lays out the ground rules for how they work together, their partnership. It's a reminder that Hyundai Motor India's success is tied to the Hyundai Motor Group. Investors need to remember that, the good and the bad.
So we've covered a lot today. Industry trends, financials, this IPO, those related party transactions.
We have.
It's a lot to digest.
It is, but you've asked all the right questions, and that's what it's all about. Investing isn't about having all the answers. It's about knowing what questions to ask.
And doing your research.
Exactly. This deep dive, it's given you a good foundation. Now it's up to you to take it from here, do your own research, and decide if this IPO is right for you.
We've given you the map. Now you choose your own adventure.
Nicely put. And remember, investing always has risks. There are no guarantees, but if you take the time to understand the company, the industry, the risks, you're giving yourself the best chance of success.
Knowledge is power. And this Hyundai Motor India IPO, it's a really interesting case study. A company with a good track record, a major player in a growing market, but also facing tough competition, figuring out this whole EV thing.
It shows how quickly things are changing. Companies that adapt, innovate, stay ahead of the curve, those are the ones that succeed.
So if you decide to keep digging into this investment, Keep your eye on the prize, but enjoy the process. Learning about companies, industries, how the world works, it's fascinating.
It is. And never stop asking questions, challenging assumptions, digging deeper.
Because the more you know, the better decisions you can make. And that's what the deep dive is all about. Until next time, happy exploring.